The National Orientation Agency has urged Nigerians to reclaim unclaimed dividends associated with their names and companies. It raised alarm over the staggering 190 billion naira in unclaimed dividends accumulating in the Nigerian stock market. Unclaimed dividends are cash payments a company has declared for shareholders, but that remain unpaid or uncollected. Meanwhile, Nigeria's headline inflation has declined for the fifth consecutive month to settle at 20.12% in August from July's 21.88%, driven by moderation in core and food inflation, which eased to 20.33% year-on-year and 21.87% respectively. Joining me for more on this, I have Muktar Mohammed, CEO Finance with Muktar. Thank you so much for joining me today.
Thank you.
All right, we're looking at a staggering 190 billion naira in unclaimed dividends. That's a lot, isn't it?
A lot. We need to know where we are, because again, before now, you have to get that post to your address. People change address. People, sometimes those posts come, people don't get it. Then it was only 9 posts that were being used. So it's not surprising. And some of these unclaimed dividends, most of the people change address, like I said, some traveled. And again, most of them had lost interest in the stock market, especially those that were in the market between 2005 to 2008, during those very serious meltdown period in the market. So, and again, some companies also were the major, which made some of the dividends now become different from the, so a lot of things happened, and that's how we got that 190 billion.
But should it be difficult? I'm just wondering. I mean, there were paperwork then, even though it was manual compared to what we have now, which is digitized. Should it be difficult? I should be able to prove, even if I am married and I have changed my name, or even if, for people who probably, let's say parents who are aged, or parents who are even long dead and all of those things, can their children claim their dividends, or isn't there a way to get back these things? Why aren't people, really going after their monies?
Well, number one is education. Like you say, National Orientation Agency started that, but I think that should be pursued by Security and Exchange Commission and Nigerian Stock Exchange Group. I think they should be the one to educate the investors. They are more in a better place, but the National Orientation Agency seems to be the one that is pushing for Nigerians to claim their dividend. There are processes. No dividend is lost in the market. Initially, before now, we used to have dividend payment between, if you have your dividend between 10 to 12 years, you collect it after the, if you have a dividend that stayed up to 12 years, it's returned to the company, so you can still claim it. You go to the registrar tells you to write a letter to the secretary of the company, then you claim your dividend. For those with the registrars, you come up with proof of identification. If you have changed name, like you said, you have a newspaper advert, you have your marriage certificate, you have your means of ID. If your parents are passed on, if your parents are no more, maybe you are elderly also, then they will need to put that again with your signature placement. And sometimes once your signature placement and what you have is not the same, then you are asked to go and get a banker's confirmation from the bank to make sure that you really are the owners, check and balances. So that was one. Then again, if your parents passed on, in the letter of administration, if you come to the registrar, they will not give you, they'll give you a process whereby you give them time, you pay, they confirm from the court, you also come with the newspaper advert, death certificate, letter of administration with the admins signing. So all these are processes that were put in place for you to claim your outstanding dividend. Normally, those dividends are not supposed to be missing. But there's a law that came up that said, Security and Exchange Commission, now they passed the law that, they passed a law that makes it that after your dividend is still for 6 years, you are not, the SEC now collects that dividend. They collect it. They invest it. Now, that is what they say the new law says. Then you can, let me say you have a dividend of maybe 12 years, if not collected, you are entitled to be paid by the registrar 6 years. The remaining 6 years is with Security and Exchange Commission.
Will I still get it?
That's the challenge. They created modality to collect, but in terms of getting it back, that is the challenge. They've not created a platform.
What about the interest? Because if you're investing, you're making money, you're not making money or you're losing. It is shown in
a lot of controversy because they are not telling us what you are investing in.
I guess we'll continue this when we get back. We need to go on a very short break. Thank you. glad to know you're still with us. And of course, you're still looking at the intricacies of getting back your unclaimed dividend, especially looking at the Finance Act 2020 and, the implementation and, what SEC is doing right now. I'd like you to just continue with that.
Yeah, because of the Financial Act, which was actually put in there by President Buhari's tenure, SEC in that act said that 6 years, if you don't collect your dividend for 6 years, the government will collect it and invest it. But then investors, pressure groups said, no, that is not obtainable, and that was maybe suspended. But presently now that is being implemented by the current management team of Security and Exchange Commission, whereby if you have, like I said, 12 years, you'll be paid 6 years by the registrar. The remaining 6 years are with Security and Exchange Commission. Now, that is the act that's passed into law. Fantastic. But how do I now, after proving that I am the owner, how do I claim my own claim? Because the act did not say government will own the money. They say government can invest it in their own, maybe treasury, government bond, and when you need it, you are supposed to be able to have access to it. The problem is now, when you go to the registrar, you tell them, oh, this is they pay the 6 months. I ask for the next 6 months, they say you should write SEC. Because SEC have not really, 6 years, SEC have not really come out with modality to claim those dividends that they collect.
So how do you even implement a thing when you do not have the modality or the structure in place to make it work
seamlessly?
Yeah.
That's my challenge. What are you investing in it? What is the return? Who gets their return on investment?
In equities or fixed income. So we know whether we should expect losses or just gains.
So who gets who shares the profit? If you invest my money, does the investment goes to SEC? Does it go to the government? Does it come to me as an individual? How do I know? And again, in investment, I have a right to liquidate my investment at any time. I now have a right to come into SEC and say, look, I want my money because I've claimed 6 years. They say the remaining 6 years are with you. So the processes are not there. So that is the challenge.
And depending on the security, if it is one that you have to, maybe there's a cooling period and all of those things, that means you probably can't get the money until after a while. Should that affect me?
Exactly. But remember now, the same Security and Exchange Commission is looking at T2.
Yeah.
So how T2 means that 2 days clearance. Some of them are even thinking of T1.
Yeah, they're saying that, from 2026, they're looking at T1 and the ultimate goal is T0. So transaction day, the trading day, you get your money.
Exactly. So then now what you are owing what you are collecting as Security and Exchange Commission from investors, their own money, government tax that money, government have collected their tax, pay them their own, is now becoming what you keep. Before now, like I said, if you have that 10 years, they'll pay for 10 years. 12 years. Then they'll tell you that the other one you can write the companies, and sometimes people write to the companies and the companies actually pay.
Okay.
They return back the money to the registrar in turn pay you back.
But what you're talking about now, sometimes it's always good to also know if there are lived experiences. Do you have people who have actually gone through
I have people that have gone through it. I have people that have gone through it. And
have they been able to resolve? Has anybody been able to resolve his or hers?
That's why you ask the registrars and say, okay, you pay me these 6 years. How do I now claim the remaining 6 years? They seem to be in the dark.
Okay. I think this is a conversation that needs to continue. Maybe we need another pressure on the regulators so they can do the needful and people can get their monies. But, just before we leave this particular one, is there any other thing you think, maybe some guidelines you would like to share on how people can get back their dividends? Yeah,
there's a website. If you go to the Security and Exchange Commission, they have a page whereby if you start your name, it comes up with your name and you see those unclaimed dividends. Once you see those unclaimed dividends, you first of all will have to look at those companies, who are their registrars. You can also send mail to the registrar confirm. Then they will ask you for some specific document. And because we have gone digital compared to before, you have to fill what they call an e-mandate form, submit on the Security and Exchange Commission or submit to the registrars into a portal through your bank, and that payment will be done seamlessly as long as all variables are complete. Your means of ID, signature, placement, BVN are added to it. So you get your money. But like I said, if you have unclaimed dividend for 12 years, you can only get 6 years. While 6 years, it will Security and Exchange Commission.
And hopefully there will be a modality someday.
Hopefully someday.
All right, let's move to inflation. We've seen this disinflationary trend for 5 consecutive months now. I guess it's something to be excited about, or what do you think?
Yeah, it's something to be excited about, and again, is largely driven by monetary policy. So, I've said it over and over. I said the key driver of inflation is not reduction in liquidity in the system. When you do that, you are killing one of the most vibrant sectors in Nigeria, the informal sector, because it's largely driven by liquidity in the market, women, they drive by cash. The key driver of inflation in Nigeria is exchange rate. If you look at this 5 consecutive reduction, you realize that the exchange rate have continuously either stable or on a downward trend. So now what we have seen is that we have not known that for us to bring down inflation, because of most of what we consume, either we import, if we are not importing, the machineries that are used for those consumption are imported. So, but once the exchange rate is stable, definitely you see that inflation will definitely come down. So what we are seeing now in terms of inflation coming down, yes, it could be physical side can claim that, food supply chain, food has come down through the policy. Perpetual, you and I know that the insecurity is still there, cost of transportation is still there. But this current trend of inflationary downtrend that we are enjoying is largely driven by the stability in the FX market, which is a monetary policy tool that is driving down inflation. There must be a synergy between the monetary policy and the physical side for us to maintain and continue to see that downward trend in inflation.
Well, when you ask, they'll tell you that this headline inflation, the reduction we're seeing is as a result of reduction in food inflation and core inflation. Now, talking about food inflation, we've seen it taper, whether it's year on year or month on month. What would you ascribe that to?
Well, one, season. We're also in the good farming season. We've not seen any major disaster. And also, when you look at those food inflation that are coming down, you look at wheat, and that's what brings us back to exchange rate. You look at the machines to make some of these finished products. Security has improved in some of these places that we have the stable food, like in the northeast and the north central. We have to commend the military for that. So we still see goods come in now. Maybe not like before, but we are improving. The farmers are beginning to go to farm. We are seeing pocket of violence here and there, extremists, terrorism, banditry, but it's not as it used to be before. So that is what is driving down some of the food inflation that we are seeing. And again, we are beginning to see movement of goods and services rather than the normal means that we know, which was transported from the village to the city through trucks. We are beginning to see railway also playing a role there. That is bringing down costs. So those are part of what is affecting. We are seeing the impact on the coming down of food inflation.
Well, looking at, now that we're beginning to probably exit the post-harvest season, do you see food inflation continuing on the downward, or you see it's getting back up?
It might get back up. I remember that the average Nigerian, we don't have good storage facility for the average Nigerian farmer. That's one area that government also need to look at. I talk about fiscal policy. It should give government joy to say we are going to open a storage facility in a farm settlement. So whereby some of this product will be stored. But because they don't have those storage facility, when those seasons are off, these products are off, so cost of this product naturally goes up. One of those costs that you see naturally go up will be palm oil. In each season, you see palm oil is available, but the other season you don't see it. Maize also. So all these are also table food that have impact in the house of the average Nigerian.
All right, for core inflation, year on year it tapered, but of course for month on month, it increased. What do you think is responsible for that?
Still high cost of production. Cost of energy is still high. We've not seen a downward trend on that. We're still, cost of transportation, like I said, is still high, even despite stability in terms of fuel price coming down. But again, you have not seen that drastic reduction in terms of cost transportation from point A to point B. So those are the key drivers of those. And again, like I said, insecurity is still there. Not all areas are afraid to move their goods from their farm settlement to the city to be sold. And that also is a major problem. Infrastructure is still there. Also in terms of good road network, thank God for the improvement in terms of rail, but there are still those challenges. And so those are part of what will continue to, why we are not to stay, saying that, we'll continue to see those downward trend in this core inflationary area. But the good thing is that as long as we continue to maintain stability in the FX space, we could see that play out.
Well, not just stability. I think beyond stability, people really want prices to actively go down. In real life, actively go down.
That is a challenge. Like I keep telling people, when you have reforms, once reforms comes in, depending on the reforms, the first sector to be hit by reforms sometime are the manufacturing sector, especially in the developing economy. And then investor confidence will be low. And then company output will be low. And when you look at our own reform, the first people to be hit were the manufacturing sector and the telecom sector, mostly sectors that are import-driven in terms of machineries or finished products. And we saw that with the exchange rate moving to 1,900. Now we have seen that stability at 1,500 or 1,550, depending on whether you are operating in the parallel market or the official market. So that is the first place that you see something. And you see companies are now coming back to profits. Those companies that were doing huge losses due to FX losses, you can see them, they're coming down. That is, first of all, you see the impact of inflation. Secondly, you see investor confidence. Just like you pointed out in your report, in the FX market, the equity market, you can see those confidence. We are seeing tickles of numbers of foreign investors coming into the market. Even if local investors are still the key drivers of the market, retail investors especially, that's why you are not seeing the kind of bullish runs you shouldn't see going in for a long time. Because when you have a foreign investor coming in, that's going to stay in maybe for 1 year or 2 years, and they are not those that are involved in day-to-day trading. So that will help both the bullish trend. But retail investors, especially in seasons like this, where people need to pay school fees and others, you see that they go in and out. So that's why you're seeing that pressure. But the confidence is there to even attract foreign investors. So after these three processes are done, companies, investors, businesses, then you begin to see it trickle down to the average Nigeria. And so that is where we have to wait. Because again, like I always say, we are not there overnight. We don't hope to be there out of there overnight. It's a process.
Let's close with this. What's your outlook for inflation moving forward? If you can do this in 30 seconds, and do you also see the MPC easing or, cutting rate at this point?
The governor has said it in his interview in Brazil, that we are moving towards cutting rates. With the kind of inflation we've seen, with the kind of coming down of inflation, naturally, it should cut down rate. And that will help.
Should we see that next week?
I don't think so yet, because I'm saying what you're saying is fragile. So they might still want to maintain this corridor. I think, but before the end of the year, we might see those rate cuts.
All right. Thank you so much, Muktar Mohammed, CEO Finance with Muktar, for your thoughts on the show today.
My pleasure always, Patricia. Thank you for having me.